Hey, good morning, everybody. This is Dan with Data Trend. Today is Thursday, December 19th, 2013, and it's about 4:50 a.m. here, Mountain Time. So we have 2.5 hours or so before the market opens. Today, what I'd like to do is go through the three open options positions I have. One is in the Russell 2000, the IWM. One is in TLT, the 20-plus year Treasury bond, and then the last one is in gold, GLD. So what we're looking at right now is a weekly chart. You can see it right there, weekly, of the Russell 2000 IWM. And the trades I have open in the IWM are based on the weekly P theta system that I've been talking about on the blog. And essentially how the system works is price lives either above or below this parabolic SAR, the parabolic stop and reverse. And we're using this just as a trend filter. So if price is trading above this, what I'm going to be doing is I'm going to be selling puts down below the market with 90 days to expiration at around a 10 delta. So the original trade I took in this took place, I'm not sure, I want to say at least a month ago or so, and I was short the 96 Jan put. I'm actually still short the 96 Jan put, so that's somewhere down in here. And that trade was initiated somewhere back in here, I believe. Let's see. Yeah, somewhere back in here. And so essentially what you can see is that what we're doing is we're saying price is in an uptrend, but even if price is just chopping around, it's very, very unlikely that it's going to head down here to our short option. So let's just jump over to the Analyze tab here and take a look at what I have open. Right now, this is actually both puts. So we'll go here first and take a look at the Jan put. So you can see I'm short the Jan 96 put, and price yesterday after the Fed closed up here at 112.88. I have an open profit of about $40 on this, and this was originally sold, I believe, for a 49-cent credit. Yeah, I can see that down there. So I have an order in the market right now to buy this back for a nickel because I won't pay commission on it. And my hope here is that that's going to get filled sometime before we go into Christmas next week, but we'll see if that happens. Earlier this week, I also sold the March 94 put, and I sold that with 94 days to expiration. And we're up a little bit of money on that already. Let's call it $17.50 or so, something like that. And again, if we jump back over, we can take a look at the parabolic stop and reverse. Our stop level is down here around 108. So if price trades to that level, sort of like how it did back here in, what is 9, September? Back in September, we'll be closing out of our short puts. So jumping back over, 108 would give us a loss of about $32 or so on this, and I sold this for 70 cents, and I'm really wanting to collect all of that. Maybe I'll buy it back as well for a nickel, but I want to collect the bulk of this premium that I've sold. So that's essentially, we could call that a 2-to-1 risk-reward ratio. Now let's go back over here and we'll take a look at gold. Gold is similar, except that I've sold calls, or a call, up above the market. And yesterday after the Fed, we sort of saw gold collapse, and it's interesting. I was looking at the futures this morning. We'll look at the mini gold futures. Gold moved even lower overnight. It's sitting down over 2% at this point. And I really feel like we're going to at least flush out these lows. I don't know if that's going to happen or not, but it kind of looks like it. We're hanging out down here. So we'll see if that takes place. So let's go back to the GLD because that's what we're trading, not the futures. So I'm short the 139 call. So that's all the way up here. And if we come back over to the Analyze tab, it's going to look sort of similar, except it's going to be the opposite of a short put. It's a short call. And so price yesterday closed, I guess, here at 116.55 or so, something like that. So we sold this for 53 cents, and we have an open profit of about $24 on it. It should probably be a little more today, just because gold's down so much overnight. So we'll see where this ends up today. And again, I'm trying to buy this back for a nickel, and it's really nice to be up that sort of money so quickly in the trade. It was just lucky timing, really. I don't have any skill at timing. It's just sometimes you get lucky, and that's what happened there. So now what we're going to do is we're going to jump over to the Donchian channels, excuse me. And what we're looking at, this is a 50-day Donchian channel, and now we're back on a daily chart. And the dotted line you see here is the average true range trailing stop. And so you can see back here on 11/21, November 21st, price made a new 50-day low. And so for the theta breakout system, which is different than what we were just talking about, this indicates that we're ready to sell call spreads above the market. And if we come back over here to the Analyze tab, we can see what we have going on in the TLT. And in TLT, we have a short credit spread, and it's the 106-110 call spread, and it's out in February. So let's go back over here. So 106 is right here, 110 is right here. So essentially we're short a credit spread right here above the market, and our stop level right now is at 104.97. So what I'm wanting to see here is I'm wanting to see price break lower. Yesterday after the Fed announcement, we saw the price push up, and then it got pushed back down, but really not a whole bunch happened. I mean, it closed a little bit lower on the day, but not a whole bunch. What I was really hoping to see is a break below this 50-day low level again, which is at 102, I don't know, 16 or so, something like that. So now what was that stop level again? I've already forgotten. It's early though. It's early. I don't know how many of you guys get up at 4:30. So 104.97 is our stop level. Let's hop back over here. And so this is basically at the stop level. So 104.99, we would be taking a loss of about $25 on this trade if price traded there today. And I sold this for a 70-cent credit. And I believe I'm trying to collect somewhere in the neighborhood of 50 cents on this. So still a favorable risk reward, and we'll just see what happens. Every day, though, this potential loss is going to get a little bit smaller as the 106 option decays. So that's all I have for today. Thank you for watching. Come visit me at thetatrend.com and have a great day.